Peter Eliades with you. This is Stock Market Cycles Update for Monday, April 28th. Let's just start out this update the easy way. Today was another market top. I know it sounds dramatic. I also know that can't be right all the time, so I may be wrong. But let me point out to you that my last three fairly dramatic calls, I would say, with pretty good confidence too, occurred right here a day before and 2 days before the all-time high on the S&P, and right here, March 25th, a special update that was put online within an hour. In fact, we were recording it at the high, this high that occurred on March 25th. Well, we're calling today another top. We'll come back to this momentarily and show you why. I hope to keep this short. I think updates have been too long. I think you'll agree with me, but I want to show you something that you can take advantage of that's completely free of charge. Everybody likes one of those if they are of value. Okay, cycles versus chaos. Market experts go live, just announced. Jake Bernstein, Peter Eliades, Dr. Richard Smith, live May 1st, noon Eastern Time. So that's 9 a.m. Pacific Time, noon Eastern Time on May 1st, just a few days away. Okay, register now. Just type in your name and your email and submit, and you will be registered for this presentation. Copy down this URL right here to get to this page, cycles.org/cycles-v-chaos/. It's an easy one. Just pause your video and copy this down, go to it, and register for this. If you're interested, you might not be interested. If you are, it's a no-cost thing. No cost, no obligation, no nothing. You can watch it live on YouTube on May 1st. All right, so I start out with that. That was easy. This is a little harder. How do you call turning points of the market? Market tops, market bottoms. Some people would tell you it's impossible to do. No one can predict the stock market. And granted, it's a difficult thing to do. I thought we were at tops going back here for the past several years many times. Most of those times were tops, short term, then something like this turned around, went up to a higher high again. The reason that was happening, for me anyway, was that I was aware of what I thought were very long-term cycles that began topping around 2021-22, coming into the present time zone. So I had told myself, and I told you as video subscribers, that every short to intermediate term top would be treated as a potential long-term top. But the last two calls that I made, right up here on February 14th and February 18th, there was a big holiday in between for a couple of days. Those were the exact 2 days before the February 19th all-time high in the S&P. We couldn't have called those with more confidence, saying crazy stuff like, I wish I could stake my reputation on it. That would be foolish. But I am damn confident that that's the case, that this was a top, okay? So that's this top that we called the all-time high. We had a great decline, and then we had a rally. Well, guess what? This top on March 25th was also called by us almost to the minute or the hour in this case, saying that the signs are strong that we are at a market top. We had this big decline that ensued, and now we've had a really nice rally. And I'm saying today, we are at a market top. What are the odds that I'm wrong? I don't know what the odds are that I'm wrong. I feel confident that that's true, but I also know that no one calls the market perfectly every single top and every single bottom. So this call could be wrong, but I'm saying we are at a market top. Okay? Now, perhaps you've noticed something unusual were the three tops I pointed out to you that we called. See these big purple circles here? And there's one here, one 2 days after that on March 27th, and one today. You know what those were? Those were candlesticks, Japanese candlestick doji days. DOJI. I'm not going to go into the principle of it now. This one's a very simple one, however. A doji day is formed when the opening price and the closing price are basically the same. Depending on the price range that you're looking at, they could vary from 1 or 2 points. But if you're talking about a 30, 40,000 item in the average or index, it could be a 30, 40 point difference in the open and close, and they'd still be sitting on top of each other. Okay. So I'll give you the data today for the S&P. The S&P today, look in the box, opened at 55.29.22 and closed at 55.28.75. Less than 1 point difference. So big deal, ladies. I see a whole bunch of those on the chart. Before that, they weren't market tops. You're absolutely right. And by the way, doji days can form either tops or bottoms. If you come down into a bottoming area, what turns out to be a bottoming area, and you see this signature that's given, TradeStation has set it up so you can mark all the doji days. If you see that at a low, while a low is occurring or low prices, that could be marking a bottom. These last few doji calls have been perfect. And mind you, I didn't make these calls based on the doji. In fact, if you had asked me if they were doji days, I wouldn't even have known it at the time. The fact that today turned out to be a doji day, I was paying attention to because it was a perfect bearish engulfing pattern for most of the day, or a good part of the day. And most of you know what that is. There are red and green bars in candlesticks. When the red bar completely engulfs a preceding green bar, that's a bearish engulfing pattern. We had that for a good part of the day today, but then the market rallied, and guess where it rallied to? It rallied to where it opened, and that made it a doji day. Okay? So what else do we have going for the potential of being a market top? Well, we pointed out the speed resistance line. In theory, speed resistance lines tell us, because marking from this high on February 19th to this low on April 7th and drawing in the 2/3 speed resistance line and the 1/3, the theory says if you get above the 2/3, you should get to the 1/3. That's what's happened. If you get above the 1/3 convincingly, and that doesn't mean a little marginal move up here or whatever, that means a convincing move above the 1/3 speed resistance line makes the argument that you go back to the all-time highs again. There's no way I can see that happening in my current viewpoint because of all the circumstances that occurred here that I explained to all of you as subscribers of our videos at the time when we called with the greatest of confidence a market top up here. Okay. So now, what do we have? Well, we have the speed resistance line. I've pointed this out to you for a couple of days now. I showed you the close on the hourly chart. Let's look at that quickly. Here's the hourly S&P chart, 65-minute bars, all-time high, February 19th, low on April 7th, 2/3 speed resistance line, 1/3 speed resistance line. And these are the hourly things. You can see we got above it. I told you at the time. I would not be concerned if we got above it. If we got above it up here, I would obviously be concerned. But to get above it a little bit didn't concern me. And now the whole deal was closed with a doji day. Here's that 1/3 speed resistance line. Exciting things happening right here and now, folks. What else can I show you? Well, the only thing that concerns me about this call of a market top is the projections. We showed you the 3.5 to 4 had been met, the 7 to 8 had been met, but the 12.1 to 13.8, and we're not looking at that exactly here. Well, let me show you the 12.1 to 13.8. Here it is up here. The lower end of it, 56, 53, 27. And we have not reached that. I'm not going to go into a long explanation again, but my reason for that is this day right here, okay? So I'm saying that this crazy emotional day moved the whole price pattern up higher than it would have been without this crazy day. We still most likely would have had a good rally from this low, and we were looking for a rally to form a potential loop. But I don't think it would have been this large a rally on a natural basis of the market. Let me show you what I did. I reasoned to myself, there's no way I can adjust all these prices to come down. I mean, I could do it, but it would take hours and hours of work to bring them down, say, okay, if this were a rally only up to here or here, in other words, a big day, but not this almost 10% move to the upside, what could we mark differently in terms of the projections? Well, here's what I said. This was a very sharp decline in the offset lines. What if we change the offset lines to make an adjustment for that price and made them, instead of 12.1 and 13.8, maybe 11.3 and 13.8, okay? That would be taking into consideration the fact of this huge move up here and attempting to change it a little bit. So what I did was I put in these two parameters, 11.3 and 13.8. Usually this should be a 12.1. So we changed it only by 8/10 of a day. Okay. And what does this show as a projection? Look at this. Just by changing it by less than a day, 11.3, you made the projection window. Just barely, but you made it. So everything's fitting together very nicely here, folks. I'm not going to spend any more of your time talking about the market. I showed you why I am saying today was a market top. Keep in mind, I, like everyone else, could be wrong, but I'm saying that with confidence. And with that, I guess we should comment on our trigger for our negative position in the S&P. It remains a close above 55.50 on the S&P. We're still close to that at today's close at 55.2875, and the high for the day was 55.5366. If we had closed at that level, the trigger would have gone off to exit our negative positions. We're keeping that at the same price, a close above 55.50. And with that, I'm signing off, and we'll talk to you tomorrow. Thanks for watching.